Now the mic's working. Hello and welcome everybody. Welcome to the final part of our Back to Basics webinar series. I'm pleased to be here with you all to share something that's been around on the matrix since day one, but has grown a lot, and now with the most recent update that we got to the matrix back in the beginning of April, we have a new piece of this tool that allows us to get even more information out of the matrix than we did before. So today, I have momentum to talk about. We're going to talk about what it is, how to use it, and at the very end, we're going to go back through and review everything that we've covered so far in this series. So let me just get the PowerPoint pulled up over here, and we can get started with today's webinar. For those that are asking about Cleo, she has decided that she likes her shoebox, and that's where she's going to be. So let's get into today's presentation and talk about momentum. Disclaimer, today we're going to mention a little bit about trading strategies. Anytime we mention trading strategies, these are not us saying, go use these strategies, it's going to make you rich. The point of these strategies is to be educational resources. We use historical data and historical prices, and past results cannot guarantee future performance, so please do your own research before making any investment decisions. Trust, but verify. So today's question is very simple. What is momentum? For anyone that is familiar with the matrix, you have seen momentum before, but it has grown and it has a lot of new crazy stuff. So I want to break all of that down piece by piece so that we know what we're looking at. But before we talk about momentum, I really quickly want to review what the matrix is. Again, this is a series. There are 4 parts to the series, but if you're just coming to this video for the first time because you saw momentum and you wanted to know what it is, I want to make sure that you have all of the info that you need before to get to that. So, what is the matrix? In a very simple explanation, the matrix is a picture. We take a picture of the market every day using the S&P 500, well, an ETF of it, exchange traded fund, and 11 different market sectors such as technology, real estate, industrials, energy, and so on. And to make our job easy, and more importantly, to make anything actionable, everything we look at is using exchange traded funds that you can actually go to Fidelity, TD Ameritrade, or any broker and buy. The ETFs that we choose to use are State Street Spider ETFs, or SPDR ETFs. These all are based on the S&P 500, so only S&P companies broken out by sector. Some sectors are bigger than others, but in our eyes, everyone's equal, and we will compare them all fairly. So this photo that we take, this picture of the market in every single day, is just that. It's a picture. Just like you can take a picture of me right now. I've got fairly long hair, short beard, and go look at a picture 2 years ago when we first started Sectors Made Simple. By the way, almost 2 years we've been around, so you can go back 2 years ago. I was in a different background, my hair was significantly longer, and a lot's changed. The matrix is supposed to show us that. It's only this picture. Momentum shows us the changes. But what you see here, you get Jonathan with this shirt, this hair, and this voice. That is today. And that is the matrix. The matrix is different every single day, just as we change every single day. So to make the matrix, we compare each sector and the S&P itself against all of the others. And we check them on 2 things. Short-term strength. which is shown as X's for winning or O's for losing. And long-term strength, shown as P's for winning and N for losing. If you're interested to learn more about that, go take a look at our Back to Basics episode number 2 on point and figure buy and sell signals. Now, how do we make the matrix? This one is pretty straightforward once you get past step 1. Step 1, find the winners and losers 132 times. We have 11 sectors and the S&P, and we have to compare them against 11 other ETFs because you can't compare it against itself. So that ends up giving us 132 charts. Now, when we add them up, what we're going to do is we're going to call them by their names. P stands for positive, N stands for negative, so we refer to this as the positive trend. Then we have our X count direction. Very straightforward. X stands for the X, or a column going up. So we add up how many positives we have, both in the short term and in the long term. And we put it together in a nice big table, like this. What you see here is what the matrix comes down to. Now, the matrix does have all these cool colored blocks, but all that does is it tells us those positives and those X's and those negatives and those O's. If all you care about is, and how do I use it? This is what you care about. The X count, short-term strength, the positive trend, long-term strength, and then smushing those two together and making them friends, total count. The short term plus the long term. Let's use this table below and do an example. Materials, or XLB. Materials has a long-term positive trend strength of 8. An X count short-term strength of 2. That is how you read the matrix. And if you notice, up at the top, below where it says current matrix, it says May 13th. May 13th is today's picture. But yesterday was different. And because of how crazy the market's been the past few months, every day is different when we look at the matrix. Now, before we get into that, let's first ask the question, why does this matter? Why is there part 4 to this series? I promise you it's not just because I need webinar ideas. It's because there's a lot more to the matrix than just the matrix. Remember how I said before that the matrix is a photo or a picture of where strength is for that day? May 13th. So that's pretty useful in that it lets us see who the leaders are today. But it does not let us see who the winners were or who gained or lost strength. For that, we need to do just a little bit more. And for that, we need a way of comparing today's matrix against a past matrix. And this should come as no surprise. This is where the topic for today's webinar comes in. Momentum. Momentum is our way of seeing the changes in the matrix over time. It lets us compare today against a previous period and get to see what's changed in the matrix. Now, last week we talked about BPI, and BPI is a bit trickier to calculate. There's finding a bunch of charts and then doing a little bit of math and then doing some division. There's a lot to it. Momentum's not that. Momentum We take today's matrix and we subtract a previous matrix from it. That's it. This minus this. Done. And because this is all we're doing, when we start off with something that looks a little like this, and we're subtracting something that looks like this, what our momentum table is going to end up looking like is something like this. Well, I'm going to show you in 1 second. Because the only difference is on those other matrices, on today's matrix or a past matrix, you're going to see the totals, 8, 2. For momentum, you're not going to see 8 and 2. You're going to see +3, -4, 0. Everything is not the actual strength, it's the changes in strength. This is best seen by just going and looking at it. So up here, we have the current matrix. That is today, May 13th of 2022. Then we have momentum. If you notice, SPYs 4 and 4 have gone away. And now it's just positive an X count. Just like for building materials, we've gone from 8 and 2 to 0 and -1. What that's doing is if we click here on Show Full Historical Matrix, you can see what the matrix was previously. 1 day ago, 1 week ago, and I'll get to that in a minute. But if I click Show Full Historical Matrix, aha! Now we have another matrix. We've got all of our crazy cool colored boxes back. But more importantly, we have the counts, the actual strength from that day. Now let's do some math, shall we? 4, 4, and 8. 4 minus 4 is 0. 4 minus 2 is 2. 8 minus 6 is 2. So 4 minus 4 is 0. 4 minus 2 is 2. 8 minus 6 is 2. And that's how we get momentum. It is today's matrix compared to a previous one, where we subtract the previous one from today, and our matrix becomes those changes. And if you notice, all of that crazy colored grid is gone from the right side, and I'll get to what those arrows mean in a couple minutes here. But more importantly, we have all of our color has moved over to the table, because now we get to see where there's no change, which is a 0. Positive change, which is green. In this case, dark green is a bigger change. Red, the darker the red, the bigger the loss. And we get our total. So long-term, short-term, and total all put together. And if you notice, the majority of change is in the short term. That makes sense. Again, what good would long-term strength be if it changed just like that? It needs to have a little bit more oomph behind it in order to move. This shows that very, very clearly. Compared to just yesterday, discretionary has shot up +7 in short term, but nothing in long term. Technology has gone up by 4 in the short term and lost 1 long term. What did it lose 2? Well, that's where this part below, these purple boxes, come in. I'll get to what those mean in just a few minutes. Because right now, I want to cover this momentum period, and what that means. I'm going to kind of speed through this one because it's very self-explanatory. When we compare momentum, we need to compare from today against a past one. So we can set some different time periods to compare against. And just to help out and make it easier on you, we give you a set group of time periods that there's no calculation, there's no wait time, it's always just ready to go. 1 day, 1 week, 2 weeks, 1 month, and 3 months. Now, if that's not enough for you, and if you want some more information, you can always put in your own custom date. So you can go in and you can choose custom and select any date you want. Just so I get this loaded up, because YouTube does take a moment to load. First person to give me a date, we will look at the matrix today compared to that day in history. So, here we have our momentum period. We have our previous trading day, which is yesterday. So that's the 1 day. 1 week, 2 weeks. Notice how all of these changes are now significantly larger. XLB, very dark, -10. XLK, XLRE, both the same, -5, -6, -11. We're seeing large losses across the board. So let's look back even further. 1 month and 3 months. We get to see it all right away. Jose gave me the date 4/20/2022, so let's do that. We can either type in 4/20 or we can use the calendar to go through and find the date. And for some reason, it did not like me doing that. There, oh, because it was already running, that's why. So here's today's matrix compared to 2022. Sorry, 4/20/2022. SPY has gained 1 long-term strength. Materials lost 5 short-term, gained 1 long-term, 5 and 1, so on and so forth. So any date you want, you can find a custom matrix, or sorry, not a custom matrix, a custom momentum to get to see that strength. And again, you can see the full historical matrix to not just get the differences, but get the actual values from that previous date. So, is that it? Is that what momentum can do for us? Well, close, but there's just a little bit more. And thank you, PowerPoint, for just spitting out all the slide. Anyway, momentum gives us a little bit more than just those changes. Think about this for a second. We are comparing SPY against 11. Can I turn the volume up a little? Yeah. All right, hopefully this is better. So we can compare SPY to 11 other things. But what happens if in 3 of those it gains strength and 3 it loses strength? That doesn't mean that there was no change. But if all we had was this minus this, we're going to miss it. 6 minus 6 is 0. But what we don't get is it's 6 plus 3 minus 3 minus 6. There's a lot more that's going into that we don't see. But let's look at an actual example. And it's not the 1 day momentum we need to look at here. It's the 1 week momentum. So if we look at the 1 week momentum, SPY didn't change at all. If all we had to go off of was this area right here, there wouldn't be anything. SPY wouldn't change. But under the hood, there were lots of changes. To show you how many, SPY can't be compared against itself. There was no change against financials and no change against utilities. Every other chart had at least 1 change in it. But the total again was 0. So here's what we find when we start looking at the 1 week momentum. SPY gained 3 short-term strength over materials, which is XLB, industrials, which is XLI, and real estate, which is XLRE. Then SPY lost short-term strength compared to technology, XLK, discretionary, which is XLY, and healthcare, which is XLV. 3 gained and 3 lost come out to a net change of 0. Long-term, SPY gained 2 long-term strength compared to energy, XLE, and technology. But SPY also lost long-term strength compared to staples, which is XLP, and communications, XLC. So there were 10 total changes. 5 positive, 5 negative. But because of all of those changes, because each one canceled another one out, there was 0 overall change in SPY's relative strength. That is why this recent update to the matrix is so valuable. 0 doesn't mean no change. It just means there was no overall change. But under the hood, there was lots. And let's go through each one of these because I want to just highlight how much information just taking a little bit more time to look over at the purple means. Materials, it only had 4 changes, and those 4 changes were all negative. Communications, we had 1 long-term down, 2 short-term up, 2 short-term down. Financials, or energy, 2 short-term down. Financials, 1 short-term down, 1 short-term up. Industrials, short-term up, 1 short-term up, 5 short-term down, and 1 long-term up. I'm sure you can do the rest of these as well. The one that I also want to show here, though, is healthcare, where we had 2 up, but 4 down. And then long term, we had 2 up. This is where things get really interesting. And to illustrate this, I want to give an example. There is a huge difference between no change and no overall change. Financials had very little overall change. It only had 2 relative strength charts change. That means there is not as much change in leadership going on with financials. Yes, it is saying 0, 0, and 0, but it means pretty close to 0, 0, and 0. For SPY, that's not the case. For SPY, there was significant relative strength change. It just so happened that all of those relative strength changes also gave us 0, 0, and 0. There's a lot more to relative strength than just who is the leader. That's why momentum is important. And once you start understanding momentum, the next step is starting to look to see how much is changing. Does 0 really mean 0? Or was there a lot happening underneath the hood that we just didn't even notice? So that is how we would read momentum and a little bit of how we can use it. But let's now move to a little bit more actionable ways to use momentum. Because not only is momentum a really cool way of seeing changes, it's also a really good way of trading, using the matrix as a trading aid. Because momentum tracks changes in relative strength over time, it allows us to create trading strategies because you're no longer just looking at the top sector. You're seeing who is gaining ground. Yes, you could look at the top sector, but the top sector might already be at the top and then on its way down. That's not what we want. We want the sector that is growing and working its way up the sector leadership ladder. Let's go back really quickly to 2021. Throughout 2021, we found a trading strategy that outperformed the S&P 500 by a significant margin. That trading strategy involved one single thing. Go to the matrix on Friday afternoon before the market closes. Take your momentum, X count momentum, sort by X count momentum for the 2 weeks. Buy the sector with the highest X count momentum as long as it's above 2. And if we have a tie, take the one with the higher total count. That's the strategy. I will show an example. Keep in mind, if you're watching this right now live, but also if you're watching this recorded, market's already closed. This trading strategy would be using the Thursday matrix to trade, not Fridays. I'm just showing an example of what the strategy process would look like. All right, you come to the matrix. The matrix loads. Momentum, 2 weeks ago. Sort by X count. You'd buy discretionary. Alrighty, see you next Friday. That's all there is. That's the entire strategy. You load the matrix, you click 2 weeks ago momentum, you sort by X count, you buy the thing with 2 or higher. If nothing has 2 or higher, you hold cash, check in next week. How well does this do? Well, let's see. We're going to start in January. We got to start on a Friday. Cool. And we're going to end the end of the year. Buying one sector, trading once every week. And we want to use our X count momentum of 2 or more for 2 weeks. And if we have a tie, take the one with the highest total count. That is what the backtesting system here lets us use real stock prices and real historical data to see how strategies would have done over time. So everything we're looking at right now is real prices and real stuff and real matrix data. So when we click Run Backtest, we will get to see how this strategy would have done last year. If you had bought and held the S&P 500 ETF SPY, you would have made 27% return. If you had invested with this matrix strategy, with the exact process I just showed, X count momentum of 2 or more for 2 weeks, you would have gotten 81.3% return. And that's it. That's the entire strategy. Again, I will say this right now. This is historical data. Past results cannot guarantee future returns, and no strategy is perfect. Strategies will always have ups and downs. No strategy is going to hit it 100% profitable 100% of the time. But when a strategy works like that and can provide returns and simplicity, it gives us a very good starting point to work from. And all of that is just looking at momentum. The only reason we would look at the actual matrix is to see if we need to break a tie. If two things had the exact same X count. Let me see if I can find a time period where that is the case. Aha, here we go. If this was our 2-week momentum, we have discretionary, technology, and communications all tied. We would come up to the current matrix, and we would go down. All right, discretionary is here, okay? Technology is here, and communications is here. So we would buy discretionary. So I believe there is a question. Si sigo esta estrategia, ¿vas a vender si tienes un otro sector? Sí. Cuando entres a comprar un nuevo sector, vas a vender el primero y vas a comprar el próximo. Si no hay un sector ahora, solamente vas a vender y esperar para la próxima semana. What I was answering there is if we run into a situation where when we come to Friday, what this back testing does is it sells, and then right after it sells, it buys. And then it holds. If the new thing is there is no new thing, it would sell and hold cash for the next week. The reason I show this strategy right now is not to show how amazing the matrix is. It's pretty amazing though. The reason I show this is to show the importance of not just looking at who is the leader today, but how ignoring the current matrix, just looking at momentum, can give us a strategy that outperforms the market 4 times over. That is a pretty impressive metric when momentum alone outperforms the market. Ruith, why would you buy XLY if the other one had 7.2? The reason that I was looking at XLY here is it has the higher short-term strength. Because we're trading here in terms of a short-term strategy, personally, I would prefer to go with the one that is 7. Yeah, of course, Jose. I'm always here to help out. And even if we're not live on a webinar and you have a question about a strategy or the matrix, you can always email me. I'm more than happy to chat about this kind of stuff. It is fascinating to me and it's very fun to get to talk about, so always happy to have a conversation or answer questions. So now we've talked about the matrix, we've talked about momentum, and we've talked about why momentum is there. It's not just a fun piece of information. If we looked at momentum and nothing else, we could, in 2021, we would have beaten the market 4 times over. So we're done. That is the Back to Basics series. Let's quickly review everything, and we can talk about what we know so far. In episode 1, we learned how to read a point and figure chart. We learned what point and figure is, how it is different than other types of bar, candlestick, or line charts, and how to read the X's and O's of it. In episode 2, we talked about point and figure, and we went a little further to talk about the buy and sell signals on point and figure using support and resistance barriers. And we talked about how those short-term direction and long-term trend turn into what we have on the matrix with X's and O's for short-term and positive and negative for long-term. Episode 3, we talked about BPI, what BPI is, how it can be calculated, and how BPI of the New York Stock Exchange and the S&P 500 helps us to gauge the risk of a specific sector. And then finally, you now know what momentum is, how momentum is calculated, and how momentum can be used to create simple and effective trading strategies. And that's the end of our Back to Basics series. It's been very fun to get to revisit topics that we haven't covered in 2 years and look at it with 2022 knowledge, 2022 resources, but more importantly, a 2022 matrix. The matrix has grown significantly since we first started this back. I believe the first matrix ever created was just about a little older than 2 years ago. So getting to see how far it's come since then is very fun. Now, I feel it's only appropriate that we look now at the matrix, not just the matrix, but the entire dashboard. And we can look over and use a lot of the knowledge that we've gained to talk about what we see and where that information can start to spur investment decisions. Again, everything I say right now is solely as examples and educational purposes. So let's start with the basics. Our X-count momentum strategy, if this were current, we would have been buying discretionary. Cool. That's one done. Another one. I want to invest in some companies. I'm only interested in companies. What can I do? Well, the easiest thing to do, if you're looking to invest in a company, you can either look at the momentum, there's nothing wrong with that. One of the ways that I've always used the matrix itself is I like sorting by total count. It gives you a little long-term strength, a little short-term strength. We're not looking for a strategy here. We're looking for something to buy and hold until it hits our profit point or our stop loss. So what I might do is I might say, all right, energy's looking pretty good. Let's head on over here to finviz.com. Here's a link. It is a free website. And let's go in here to Screener, where we can sort by energy. Now we have 278 energy companies to go through. From here, the choice is yours. We can do some fundamental or some technical analysis, some combination of the two, or if we don't feel like having this many options, we can sort down by only the S&P 500. Here's 21 companies, and it's a lot more manageable to go through 24 companies or 21 companies and find the ones we might be interested in. So that's a very easy way to start your search for a new company to invest in. From here, again, the decisions are up to you. For Sectors Made Simple subscribers, we have a group of spreadsheets that we call the Sectors Made Simple Investment Resources. To quickly show an example of this, we can take things a step further, where we can go here to energy under the industries and see, okay, refining and marketing is doing the best right now. But honestly, everything's down in the past week. I don't want that. Let's go with something else. Let's look at staples. So now we put in staples. Beverages and brewers. Seems to be making a comeback. Down overall, but definitely improving. But non-alcoholic has been performing well, is green for every single period. Let's take a look there. You click right here, and it brings you to the stock screener. Now we have 19 companies within the non-alcoholic beverages industry within staples. Top industry within a leading sector. Once again, 19 companies. We could go through now and we could do something like this, where we go over to our, which page is it? It is the signal lookup. Remember our point and figure buy signals? Well, this sheet lets us put in stocks and see if those stocks are currently on buy signals. So we can put these in and see if and when we hit a buy signal. Fizz is on a buy signal. Let's go and take a look at the chart. It went on a buy signal today. Cool. It broke a triple top breakout. That right there can be an investment decision. You looked at the matrix, saw staples. You went over to our spreadsheets. You found beverages non-alcoholic. You went through those companies and you added them to our signal lookup, and it found that Fizz is on a point and figure buy signal. And that could be a stock that you buy. That is, again, just another way to use the matrix. If dealing with companies is a bit much, if dealing with all of that is just a bit much, we can go over to the sector ETFs, where we can find our sector ETFs, their daily price changes, and again, if we don't want to complicate things, if we only want to come to sectorsmadesimple.com and end our search there, okay, we can look at the things on breakouts. How's healthcare? All right, not looking too hot. It is technically in a buy signal. The buy signal, though, was back in March. We're currently in a column of O's, almost hitting a sell signal on a triple bottom breakdown. Not my cup of tea. Honestly, I don't like tea at all. I prefer coffee, unless chai tea. Chai tea is good. All right, next one. Utilities. Utilities. Breakout back in March. Okay, maybe not our buy and hold. Staples. Okay, column of O's, buy signal was back in April. Again, not my cup of tea. Energy. Purple boxes means that happened today. Energy went on a buy signal today. What would be interesting to follow here, going back to our idea of point and figure, is those resistance barriers. Where did people think before, all right, this is the top, we're going down now? Humans, us, these weird things are what drive the prices of stocks. It is based on people's interest, people's thoughts and ability to spend, but most importantly, people's fear. People get very fearful, but people also try and get hungry when there's room for opportunity. That fear is what causes the resistance barriers. That hunger is what causes the support barriers. So what I'm looking at here now, yes, we went on a buy signal when we broke that that double top. But I'm also looking now at this and this, the previous high points where it's turned around before, to see where it's going to go. I'm interested to see what happens if and when it breaks above that 82. If the price hits $83, so if this was the column of X's, now we're in some interesting territory. Now, the last thing I want to show is the BPIs. Because again, you can get BPI on stockcharts.com. StockCharts does offer BPIs. If we go down here to Candle Glance, predefined scans, sector BPIs. I'll zoom out a little bit. Here's all the BPIs, but this is only for the S&P 500. So if you're looking to invest outside of the S&P 500, these are not going to help you. There's 500 companies, 505 if you include subsidiary tickers. In the S&P 500, there's over 3,800 in the New York Stock Exchange. They will give you the 500. We'll give you the whole thing. So this provides a great way of comparing. If we're looking at investing in a company that's not in the S&P, what the overall atmosphere of that specific sector is. If you notice, our goal here is not to give you the same information that FinViz might or what StockCharts might. Our goal is to give you something to better that. We want to try and use what they do and teach you things around it to make your life easier. So again, let's look through the 3 different ways we've talked about so far to use the matrix. One is the momentum trading strategy. 2 is using the total count on the matrix and going through different industries. I showed you how to manually do it on FinViz, but how our investment resources spreadsheet makes it even simpler. And 3, if you don't want to deal with any of that and all you want to do is buy based on technicals, you can come over here. You can find all of the buy and sell signals for the sector ETFs, their current price changes, their point and figure signal, and direction. And again, if you're looking to invest outside of the S&P 500, it will do you pretty well to know what the atmosphere of the entire New York Stock Exchange sector is looking like. And that's the big 2. There are other smaller, not even smaller, there are other things that we offer, like the back testing that I showed to demonstrate this strategy, and custom matrices, which takes exactly what we've seen with the matrix, but lets us create custom matrices to see all of that data. So I can give it my own list of tickers. In this case, it's a relative strength matrix for the semiconductor industry. And we can see now we have a custom matrix for semiconductors. Here's the custom matrix, but also here's momentum. It's so nice we listed it twice. So you get momentum for your custom matrices as well to compare against those specific time periods. Does anyone have any questions about what we've discussed today or in any of our Back to Basics series? In the meantime, let me just quickly do a little plug here. Everything you've seen today, the investment resources spreadsheet, everything that's available here on the matrix, so the matrix, sector ETFs, backtesting, and custom matrices, all of this and members webinars, over 100 hours of members webinars, are included in a Sectors Made Simple subscription. In addition, if you're looking to try and get a little bit more involved with day trading or trading with options, my mom, Julie Stav, is running a class series every other week that is doing day trading with options and using fake money portfolios so that you put your money, your figurative money, where your literal mouth is, and you get to practice and learn all of this material live and ask questions just like we have in this webinar live. If you're interested in a subscription, you can head on over to our website, sectorsmadesimple.com, create a free account, which lets you access all of our webinar content, or you can purchase a subscription directly through our website as well. So it doesn't seem like there's any questions, so this is where I will leave you all for today. Thank you all so much for joining us here for Sectors Made Simple. Just because Back to Basics is over doesn't mean these webinars are going to go away. Coming back next Friday, I'll be back to go over a little series that we started last year, the subsector spotlights. A lot's changed in the world since then, and we have some new subsectors to talk or industries to talk about, and we'll get to highlight all of those starting next Friday. So, if you're not already subscribed, please hit that subscribe button. It's free. It makes us happy and it helps us out. We're about to hit 3,000 subscribers, so if we can hit that today, I'd be super stoked. So thank you all so much for joining us. It's always a pleasure to get to share information and to build tools such as the Matrix, Momentum, and more to help you invest simpler. Thank you all so much.